It's been a while, Vikram. How you been?
I've been all right. Just really, I don't even know how my day goes. It's just been incredibly busy, which is amazing, in fact.
I understand, and I miss your voice messages.
Yeah, I'm really sorry. I know it's I need to be better on that. I try not to do messages at work, and then by the time I get home, it's late in the evening, and I try and just get some sleep. So I need to work on two things. One is, of course, being more timely in my responses, and the second thing is just being able to sleep a little bit more than what I currently am. So let's hope I can do those two things in the next.
No, it's nice that you've been tied up because those 2 years gave you enough time to rest.
Yeah. Actually, Kalol and I were talking the other day, and during COVID, I don't think we ever worked as hard as, we were working all the time until late in the evening. And it's interesting because just yesterday or day before, we were saying, I think it was yesterday, we had our board meeting, and after that, we all had a drink and were chatting, and we said, literally we lost 2 years of our lives because all we did was work, and we didn't meet anybody, we didn't do anything, we didn't travel.
And we sanitized.
And we sanitized.
Okay, I'll just interrupt. Should we start because it's past 3?
Sure, please.
Yeah. Okay. Good afternoon, ladies and gentlemen. On behalf of EIH Limited and SKP Securities, it's my pleasure to welcome you to EIH Limited's Q2FY23 earnings webinar. We have with us Mr. Vikram Oberoi, Managing Director and CEO, and Mr. Kalol Kundu, CFO. All participants have been placed on mute, and this webinar is being recorded for compliance reasons. Second, please. Sorry.
Recording in progress.
Sorry. Okay. We'll have the opening remarks and a presentation by the management, followed by a Q&A session. Thank you, and over to you, Vikram.
Thank you so much, Naveen. It's nice to be on a call with everybody again. I'm sure many people who were on the call earlier are on the call today as well. So very good afternoon to everybody. I'm always asked to make opening remarks, and I wish I didn't have to do that. But in this case, there's at least it's nice to share positive news. I think the most important thing for our industry is that the industry is doing well. People are traveling both on work and on leisure, and we've seen that. We've seen that in Q1, and we've seen that in Q2, and I'm sure it's an industry-wide phenomenon. From an EIH perspective, our hotels, in fact, all our city hotels are STR1, and many of our leisure hotels, Oberoi hotels, are either STR1 or STR2, wherever we have a comp set. There's some locations where actually we unfortunately don't have a comp set. For example, Vanyavilas in Ranthambore, but that hotel has had unprecedented levels of performance, strong demand, good rates as well, as has Udevilas. We also see foreign travel returning to our hotels, and that is also a very encouraging sign. So I think as we look to the future, we're certainly optimistic that this trend this will continue. This isn't a trend, but it will continue into the future. And our colleagues, I must recognize them as well, although this is an investor call. They are really the true heroes who every day go out and try and make experiences for our guests special. Service is something which is so close to our hearts. Our value system is something which is so close to our hearts. And they live by those principles, those values of our founder, Rai Bahadur, and are so committed to delighting our guests. And that for me is more rewarding than anything else. So with that, I'll pass it on to Kalol for the presentation, and we'll be happy to answer any questions. Thank you very much.
Good afternoon, ladies and gentlemen. I hope my screen is visible.
Yes, it is, Kalon. Please go ahead.
Thank you. So to start with this, some industry highlights from HVS ANR of the latest report. This, of course, report is a month delayed. So it basically gives a trend for the month of August, where average room rates and RevPAR continue to be higher than pre-pandemic levels, generally across the industry. India's domestic air traffic has also grown by over 4%. Mumbai, as per the industry estimates, has had the highest occupancy rate in August, followed by New Delhi and Hyderabad. In case of our hotels, of course, there is a slide going forward where you can get to see where occupancies are growing and where the RevPAR growth is coming from. Sorry. Just excuse me a minute. So in general, this is again for the month of August because of non-availability of information for September industry-wide. We've just shown the August figures where growth at our hotels has been higher in general than the industry. The indices relative to competition shows a pickup in market penetration index, in the average room rate index, and the revenue RevPAR growth index, as is evident from the graph. Our balance sheet continues to be strong as before. Net worth pretty strong asset base. That debt is substantially come down from 270 crores as on 31st March to 217 crores. And with buoyancy in business, this is expected to go down even further. The weighted average cost of debt, we are happy to share that despite inflationary trends and increase in interest rates, we are able to hold at 7.6%. In terms of financial agility, I think the COVID has taught us quite a few lessons, where we see when we compare with the pre-COVID Q2 of 1920, we see that while revenue has increased by 17%, then expenses have increased by only 2%. And there is an 11% reduction in payroll, as also some reduction in power and fuel. Our company continues to march on with ESG initiatives. And while a lot of initiatives are coming by, here is something to share what we've already been able to achieve. Basically commissioning of solar plants with a total capacity of 3 megawatt, which is expected to generate about 4.2 million units, where 47% on an average of the electricity consumption is being met through solar, which also reduces, apart from being environmental friendly, the average cost is also reduced from 10.9 to 5.9 at these locations. At our other locations also, it's a combination of hydro as well as wind energy. And as we move ahead, this is only going to increase. The various hotels where different kinds of renewable energy is used is highlighted here. And of course, the endeavor is to just keep increasing use of clean energy. This is heartening. Like Vikram mentioned, the RevPAR of Q2 surpassed pre-pandemic levels. This is a quarter-on-quarter performance, but if you see the two areas which are shaded with a star, you would see that Q2 of FY23, the RevPAR has been, if we take only EIH owned hotels, 9,196 versus 6,715 in the same period of 1920. Similarly, if we take all hotels, including managed hotels, the RevPAR is 8,004 as compared to 6,151. So substantial growth that one can see. In Q2, the ARR and occupancy performance is also very similar, as well as the quarter. So monthly performances, occupancies continue to rise. Monthly ARR continues to rise. The same story goes when we take the whole quarter into account. So against an overall ARR of 9,562 in Q2 of FY20 with an occupancy of 64%, we have already achieved 11,467 at an occupancy of 70% when we were to include domestic hotels, including managed hotels. I mentioned a while earlier about the trend that we have noticed in our city hotels, across cities. So when we compare with the Q2 of FY20 with FY23, the highest growth has, of course, been seen in Shimla, Chandigarh, followed by Bangalore, Mumbai, Delhi, Udaipur, almost all these places. Calcutta has seen a relatively lower growth in RevPAR of 8%, and Bhubaneswar too, and Agra has actually seen a degrowth. Occupancy and ARR performance at domestic hotels, including managed, in all the parameters, whether it's an occupancy, ARR, or RevPAR, you would see in most cases it's grown under all the categories in case of our Oberoi Metro properties, Oberoi Leisure properties, Trident Metro properties, Trident Leisure, Trident City, and others. So if we look at RevPAR, for instance, in case of Oberoi Metro, it's grown from 6,956 to 9,867. So a lot of traction there. The same follows for Oberoi Leisure properties from 7,823 to 10,444. And the story is quite similar in every other segment as well. So I think what is very effective here is to see that the Oberoi brand, which stands for luxury, the maximum growth is happening in these segments. Food and beverage also has seen an increase, and we are doing a higher by about 35 crores, about 28%, as compared to the same period pre-pandemic. So this is a question that normally comes to everybody's minds. What is the percentage of foreign tourists? So here's a month-on-month comparison. In April 22, if we were to take Oberoi hotels, the percentage of foreign traffic was 29%, which is now about 40%. So as we speak, this is up to September. So obviously, for the second half of the year, possibly the trend looks to be going upward, which augurs well for our rates and our hotels in general. But the same story is in case of the Trident brand as well, going up from 17% to 31%. And on an overall basis, if we see, it goes up from 22% to 35%. We're happy to share with everybody that we've been voted the best hotel brand in the world, yet again, at Travel and Leisure World's Best Awards 2022, with the Oberoi New Delhi being ranked the #1 city hotel in Asia, the Oberoi Udaivilas Udaipur ranked #1 resort in India, the Oberoi Marrakesh ranked #1 resort in North Africa and Middle East. There are, of course, many other awards, but these are the highlights that I wanted to mention. We continue to maintain the highest levels of safety and health. I would request Vikram to share some information on our strategic development.
Thank you, Kallol. We also thought it would be prudent or wise to share with you what we're looking at in terms of growth. So this is broken up into from this financial year up to financial year 27. And this year, later, in fact, this month, we'll open a club in Mumbai, and followed by a restaurant in Mumbai in March of 2023. In financial year 25, there you can see the list of hotels that are listed or that are given for opening, along with the number of keys. And then in 2026, also the hotels that will be opening. So that's in terms of hotels that are already underway. We're planning, design, etc., or in some cases, construction is already started. In addition to that, I'll share, if you look at financial year 27, these are also projects that are under active consideration. And this includes the Oberoi in Goa, Trident in Goa, and the Oberoi Alzora. In fact, these are all in the design phase. Some work has already started at our second hotel in Alzora, which is adjacent to the site with the same owning company. And then, most important of all, future pipeline. Sorry, I can't quite read that because I'm going.
So additionally, there are 11 hotels, 3 Oberoi branded hotels, 7 Trident branded hotels, and 1 service apartments, which are in active discussion stages. So overall, we are talking about 20 hotels. Apart from the 1 club and restaurant. And as we progress through the quarters, as and when these discussions materialize into planning and construction stages, we'll be happy to share it.
Yeah, absolutely. We'll be happy to share. So I mean, just in conclusion to that, and I'm sorry I know that there were 20 projects. The bottom part of my screen wasn't clear, so I apologize for that. To give you the exact breakup between Oberoi and Trident, and of course 1 serviced apartment, which is in Mumbai as well. But I think the important thing to highlight is that we're focusing on growth. We'd like to be as aggressive as we possibly can on growth. We still want to manage hotels of the highest standard, whether they're under the Oberoi brand or the Trident brand, and offer our guests unparalleled levels of service that they're accustomed to at our hotels. So that remains an uncompromising commitment, and at the same time focusing on growth, which is important for really 3 reasons, and I'll just articulate that. Obviously, from a shareholder point of view, growth is important for value creation, but equally we should be mindful that growth is also important for our guests. When our guests travel, we should be in locations in India where they travel to and where we have hotels. And of course, for our colleagues, it's also very, very important because we promise our colleagues learning, development, and growth. And we would like that growth to come from within the company. So for all 3 reasons, this is something which is very important, and we will continue to focus on this and hopefully have even more news to share with you, I hope, in future. Thank you.
Thank you, Vikram. I'll just add something to that. This is in addition to the various renovation projects that are also underway. In some cases, there is addition of capacity. For instance, the 10th to the 14th floors at Trident Nariman Point. There are several other renovation projects which are underway, which also are essentially will be contributing to incremental revenue for the organization. And the third thing that I would like to add before I move on to the next slide is we are committed to looking at our non-core assets. 2 of them we have already taken decisions, and they have one of them has been disposed of, and the EIH printing press at the conclusion of the last financial year. And the other one, the EIH Flight Services Mauritius, which was also declared stock exchanges. This transaction is almost towards its end, and this will be concluded very soon. So I think overall, from a company balance sheet point of view, it's all very strong for the company. Coming back to the presentation, we see strong tailwinds in corporate as well as in direct business. The MICE, this is our quarter-on-quarter kind of performance from Q1 of FY20 to Q2 of FY23. The last drop in MICE is because of a lesser number of auspicious dates for weddings, etc. But otherwise, generally, there's a higher traction. What is also heartening to note is that as compared to all the previous quarters where the slope was downward in the first 2 quarters, in case of FY23, it's upward, both for Q1 as well as for Q2. These are the standalone results. I won't really dwell on that. We're happy to share that the performance this quarter has been among the best in the recent years. There is of course an exceptional item, which is on account of some impairment. I mean, that's only about 13 crores, but we don't expect any further impairment on that account anymore. And on the consolidated accounts also, there is an additional item which has been reported along with our financial figures, which is on account of a legal case which was on, which we have accepted the award as a company. And in general, that we believe is a good decision for the company. So these figures would already be with you. I won't take your time on this. If there are any questions, we are happy to answer. Thank you so much.
Thank you, Vikram. Thank you, Kalor.
Thank you.
We'll just wait for a minute for some questions to line up. Friends, whoever wants to ask a question, request you to raise your hand and we'll unmute you and take your question. Okay, the first question is from Baidik Sarkar from Unifi Capital. Baidik, please go ahead.
I think you may be on mute.
Yeah, just give me a second, please. Baidik, you need to unmute yourself, please.
Sure. Am I audible now?
Yes, you are.
Oh, lovely. Naveen, thanks, and Mr. Oberoi, good evening, and congrats to you and the team on the continued execution. My question is really around the narrative around the cycle in the industry and the context of the fact that ADRs are still sub 10, 11,000 with occupancies around the 70% mark. Do you think the numbers add up with the narrative? I mean, I know Q2 isn't the strongest season for us, but given the noise around pent-up demand, pricing power, lack of supply, and all of that, one would have assumed that these numbers were significantly broken on the upside. So would you reckon the super cycle is still some way off, or would you reckon we're in the midst of it? And would you say that beyond a certain ADRs, even in the space that we cater to, price elasticity will probably set in at some rate?
So I would just like to, Kalol, if you could just give
sure.
the ADR figure for our hotels.
So Oberoi Metro Hotels for Q2 was 13,427. Oberoi Leisure was 27,172. Trident Metro locations was 9,156. Trident Leisure was 6,345. And Trident Cities 7,460.
Yeah, and if you take them all combined, Kalol, what are they?
This would be above 10,000.
Yeah,
I don't have it.
I think it's about, if I'm not mistaken, it's well over the 12,000 mark. We can calculate it and give it to you. We don't want to give 11,467. So first of all, Bedav, nice to be on a call with you. Thank you. We've already crossed the 10,000 threshold, as Kalol has explained with the numbers, and I believe if demand continues to be strong, there is still upside left in average room rates and in RevPAR without compromising occupancy levels. Typically in the second half of the year, the financial year, we see stronger demand. We hope that will be the case this year too, and led by Oberoi Leisure. And then Oberoi City, followed by Trident City and Trident Leisure as well. So we continue to see this trend. More specifically, I think there are opportunities that we need to explore in some of our hotels where occupancies are very, very high. This would be, for example, Trident Bandra Kulra, and Trident Nariman Point, and the Oberoi Bangalore, amongst others. But as we go into winter, we will be looking at maximizing our rates to the largest extent possible, with demand still being strong.
Sure. Thanks for that, Mr. Oberoi. Your foray into clubs is very interesting. Could you perhaps throw some color on how scalable this is? Is this a space that you think we will scalable? We will scale up as a chain. Some color on that.
So first of all, we've been operating a club in our hotels for many years. This is the Belvedere Club, and it has a strong loyalty. It's a sought after club for membership, and so we've been doing this for, I don't know when Belvedere first started. I don't recall the exact year, but Belvederes exist in our city hotels. So that was the first point I wanted to make. The second point is on the club we're opening now, which is a much larger club. It is approximately 150,000 square feet. It has facilities for the entire family, whether that's for the parents. From a business point of view, we have meeting rooms. We have multiple restaurants and bars. There are 2 pools on the rooftop, tennis court, paddle tennis, golf simulators, squash courts, a whole host of facilities, quite extensive food and beverage as well. And for children, an incredible children's facility, which is really designed to ensure well-balanced growth of a child's formative years. So this is certainly quite different to Belvedere, and you're absolutely right in pointing that out. I would like to say that let us make this a success. Let's provide the exceptional levels of service to our members. The facilities are, I would really say that I have not seen a club, not that I've seen many private clubs, but I am not aware of any club anywhere in the world that is of this standard. And we're committed to giving members an exceptional experience. And if we do that well, perhaps we can look at other opportunities. But I think our focus is on the club today, on getting it right today, and providing membership with facilities and service that are second to none.
Thank you, Vikram. Thank you, Kalal. I think Vedic has got logged out. He just messaged me and he's asked me to thank you on his behalf. I'll share your rewards with him. Okay, next we have Vikas Ahuja. Vikas, please go ahead.
Hi, thank you for the opportunity. I hope you can hear me.
Yes,
Vikas.
Yes, go ahead.
Okay, so my first question is regarding the RevPAR trend, how it has been in the month of October, taking from strong improvement in September. And secondly, how should we look at corporate demand coming back now in second half for FY23? Finally, we did give a breakup of foreign travelers, coming back. If we can get some color there, that is what part is the leisure and what is the corporate? That's all. Thanks a lot.
So one was on corporate demand. So let me, I don't know if I got all your questions. Sorry, your voice, Vikas, was difficult for me to follow, so I apologize. But I can start and maybe Kalol can assist. We've seen strong the direct segment is very strong, but equally the corporate, there's a strong recovery in corporate as well. And I don't know if Kalol has any numbers that he can share on corporate as well and how that's been growing for our hotels. But we'll come to that. So I think we're seeing a strong recovery in, for example, I'll give you the Oberoi New Delhi. Corporate demand is back to pre-pandemic levels at the Oberoi New Delhi. I would say that in some of our hotels, it's still not back to pre-pandemic levels, but the Oberoi New Delhi is certainly one. Direct continues to grow. And I would also like to point out that you can get people coming or guests coming and staying in our hotels, coming through direct channels, but who are actually corporates coming on corporate related travel. So one shouldn't look at just corporate in isolation at our city hotels, you really need to look at both corporate and direct. And if you take both of them together, there'll be a strong increase over pre-pandemic levels. Now, that's not to say that all direct segments are corporate, but they are not mutually exclusive. So that was the point on corporate, and sorry, I also covered direct in that. In terms of foreign travel, you've seen the trends. We've actually also break this data up to look at reservations for the rest of the financial year. And the US, I'm pleased to say, has recovered to just short of pre-pandemic levels. Unfortunately, the UK, and some of you may have experienced this yourself with colleagues trying to come to India, e-visas are not available from the UK, and the visa process can take time. And the last figure I saw, which is, I think, 2 weeks ago, was the UK was still 50% below pre-pandemic levels. France and Germany are also important locations, and there it was in about the 70th percentile for future reservations. But at least I'm confident. COVID, I believe, is behind us. I think India in the winter is a very attractive destination. People have not traveled for a long time, and at least I'm cautiously optimistic that we will see this trend continuing into the remainder of the financial year, which is when October to, in fact, beyond the financial year, October to April is when we see the highest levels of international travel into India. We in hotels that cater to foreign guests visiting, particularly in Rajasthan, Agra, etc., for leisure. It varies from hotel to hotel, but it's in about the, if I'm not mistaken, around the 60th percentile of what it was during pre-pandemic, and that's as of now. I'm sure that will improve. So I hope, Vikas, I've answered your question. If I've missed anything out that I didn't hear, feel free to repeat it, and we'll.
Yes, sir. Yes, sir. That was very helpful. One thing which I wanted clarification was, if we compare October versus September, how the operating drivers has been RevPAR ADR. I mean, it has improved further in October? And secondly, on the corporate travel, I also wanted some color that, obviously there has been a risk of recession in US, UK, and second half or FY24 was more like, that we will see a lot of pent-up demand coming in corporate travel. So any color around it? Thanks. And the first one was October versus the September, how the overall things have been.
September, is it?
October is currently in the quarter, so I don't think we can trends. I think it's fine to share, but I'm sorry, numbers.
So I'd say the trend is positive. I think for the reasons Kallol has explained, we can't get into any specifics, but that the trend is positive. On your question on whether corporate demand will continue, given all the problems that are happening in Europe and North America as well, or in the developed world. Actually, my perspective, and it may be right, it may be wrong. First of all, I can't predict what's going to happen there. But if I was an organization that was facing issues with demand in those countries, high inflationary pressures, etc., a slowing economy, I would certainly be looking at opportunities in the developing or in the high growth markets, India being one of them. So if that is followed by organizations in Europe and North America, or in the Americas, I'm sure that will be something that India will see the benefit of, and that will help with corporate travel to India, to our hotels and to others as well.
Sure. So thanks a lot and best of luck for the next quarter.
Thanks so much, Vikas. Really appreciate it. Thank you.
Thank you, Vikas.
Naveen, there's a question from Anup.
Yeah, I'm just reading it out. Yeah. Okay, we have a question from Anup Bhaskar, Head of Equities, IDFC Mutual. Last 2 years, hotels in India did not have to compete with international locations, and this could have helped raise ARRs. Indian tourists are no longer captive, and Indian hotel rates have crossed hotel tariffs in Thailand, Vietnam, Bali, and Malaysia. Could this limit growth in ARR going ahead, especially in the upcoming peak season?
First of all, hello, Anup. Thank you for the question. I think my kind of perspective on this is, and this is my perspective, again, you can see if it holds any grounds, but for a comparable hotel, so for a top-end luxury hotel, and if we were to talk about that, let's take our whether it's the Oberoi New Delhi, the Oberoi Mumbai, our leisure hotels, Uday Vilas, Amar Vilas, etc. If anywhere in Asia you go and you stay at the top hotels, in fact, I would say our rates will be lower. They won't be higher. For the best hotels, a hotel of that quality, whether it's the Oberoi New Delhi or Uday Vilas, as an example. So I don't believe for high-end hotels catering to high-end travel, there's certainly an opportunity for rate increases if demand were to go up. And I don't think we are priced in any way higher than those hotels in our region, in Asia, in the Middle East, etc. So, and that's easy enough to check if you see the top hotels in these, whether it's a Four Seasons, whether it's a Mandarin, a Peninsula, Amman, etc. If you see their rates in whether it's the Middle East or Asia, they will be in excess of $1,000 on bar, maybe even higher. So that was the first point I wanted to make is it's really important we compare apples with apples. Is this trend going to continue? I remember working at the Oberoi in Mumbai many years ago, where demand was very strong, and our rates in those days were 19,000 rupees. So it's really a function of, and in those days, actually, we were expensive at 19,000 rupees. The rupee was not hadn't devalued it to the extent it has today. And in dollar terms, we were charging in those days $400-$500, which was expensive. I don't think that's the case today. So I believe there is, at least for international travel, when people compare our rates with other hotels in that same segment, they will not be unreasonably high. Anup, I don't. If I haven't answered any part of your question, please let me know.
Anup, you can message me or you can post the question out here in case something slipped unanswered, or I can connect you with Vikram or Kalon sometime later. Okay, here's a follow-up one. Would you talk about new supply of hotels in key metros? Will it be limited, or do you see a fresh wave of hotel construction?
I really don't want to comment on that because I don't want to. I don't feel I'm not aware of every single project in every single metro. So I don't want to say anything which is not based on fact and rather my perception. So if I could please excuse myself from that question, perhaps Kalol may want to take a go. I'll pass on that question if that's all right.
Well, we can talk about our projects, and we are quite happy to share. I think investors and analysts have been asking us this question, and we had promised that in 6 months' time we'll start answering questions, and we have started with this one. So I hope in the coming months we'll have more to share from our end.
I hope that was fine with you, Anu.
I'm really sorry, Anu. Please forgive me.
Okay, let's move on. We have a question from KK, Krishna Kumar Srinivasan. I see you are high on occupancy. The pipeline of room additions from new projects for EIH is quite minimal.
Quite minimal.
Minimal.
If I can just answer that before you answer, Vikram.
Sure.
I think Vikram mentioned that there are 11 hotels which are under active discussions. So I would request you to wait for that to unfold in the next few quarters, and hopefully you'll not find that figure minimal anymore. Vikram, if in case you want to
I'm fine. I think you did a much better job at answering that question than I could have, so I will leave it at that.
Thanks, Kalan. Let's take the next question from Saurabh Patwa. Saurabh, please go ahead.
Yeah, am I audible?
Yes, Saurabh, please go ahead.
Thanks for taking the question, sir. So I guess partly you answered my question in the last response, which is like we need to wait. But still, I would want to specifically highlight one thing which we see. I think Oberoi as a brand has been very synonymous with luxury, but India as a destination is gaining traction, especially in terms of beach destinations, where we as of now don't have any thing. I know you highlighted in the presentation that Goa is being planned, but upcoming, so we don't have anything in Andaman luxury, which is supposedly going to become maybe a next Maldives or something. So any specific reason, or is it like because of the palace kind of hotels we don't want to get into beach destination?
No, I think anywhere where, like I said, our guests travel to, whether they're from India or overseas, we would like to be present, but we would like to have the right hotel, and the hotel, before we get into whether it's a management contract or our own development, we need to be sure that the hotel will be successful. It'll give a return to our owners or to the company if we're developing it, or one of our other companies that is developing a hotel. So that's very, very important for us. And Kalol hasn't covered the locations that are under active discussion. We will be in, if all those were to materialize. And these are projects or opportunities that aren't just hearsay. These are things that we're firmly working on. And if they all materialize, most materialize, we will substantially be increasing the number of hotels we have. So I think one just needs to keep that in mind.
Second question was, so in response to an earlier question you highlighted about the club which we are planning, which is going to be launched soon. You also highlighted one restaurant over there. And I think last year we opened a cafe in BKC. So is this a new strategy or new stream which we are trying to evaluate?
We opened Cuckoo, and Cuckoo initially opened more as a French patisserie. What we've learned along the way is, in fact, this is work which is, as we speak, currently underway. I think the opportunity lies in more for dining experience, and we're reworking that right now so that we can cater to the needs of our guests who come to Cuckoo. And by the beginning of next year, we'll be making changes that I hope will help with Cuckoo. I think it's really important. We had plans to expand Cuckoo, but we'll only do that once we're absolutely sure that we have a successful formula. And I hope maybe in the next 2 quarters, we would have learned and seen what is working, what isn't. And I hope what we're planning to do will be well received by our guests who come to Cuckoo. I think, like I said, it's important we whatever we do well, we do successfully, and we learn before we pursue active growth in that segment. Of course, hotels is something that we know very, very well, and we have a proven track record on. So our focus will be on growing the hotel business, and that's reflected in the projects that we shared earlier with you.
A lot. Thanks. It was really helpful.
Thanks, Saurabh.
Thank you so much, Saurabh.
We have a question from Amit Agarwal. Amit, please go ahead.
Hello. Can you
Yes,
hear me?
Amit.
Good afternoon, everyone, and congratulations for turning around the company after COVID. My first question is related to Wildflower. So it's great that you have given a pretty big brief about the verdict of the court. So what is your take on the verdict? I've gone through many news articles, and the thing as a layman, I've come to know that this is now this property is converted from freehold to lease, and it's a 40-year-old lease. So is it a big negative on the property? What is your take?
Okay, I'm going to pass this question on to Kalol. He'll do a much better job answering it than I can. And in addition to that, Amit, if you have any further questions, we'll be happy to take that up. But if I could just request Kalol to give a brief on what the current position is, and then we can take further questions from that.
Okay.
Sure. Thank you, Amit. I'm glad to be talking to you here. So, this was a long pending litigation, and it was for various reasons we had chosen to appeal. But at this stage, the division bench order came out. It's definitely not a negative. It's a positive for the company. But I would refrain from commenting too much because our proposal back to the government has already been shared, and we are waiting for further steps. But this is pursuant to an arbitral award that was already announced in 2005. Unfortunately, the arbitral award is not in the public domain. So therefore, it's difficult for me to share till a lease agreement is entered into with the government. But by the way, let me just share that the lease agreement is the lease period is not just 40 years; it's 40 plus 40 with under mutual agreeable conditions. But overall, I can say that we've done the evaluation, and it's definitely a beneficial decision for us to really accept the award and get it implemented, is where I would place it.
So, sir, the brief you gave is also talking about 120 crore put in FD. So will that be free, or will that be shared by the company with the government?
Well, as per the terms of the award, the company, if the lease happens, and if this is obviously in the middle of a process, so I won't really want to comment too much upon it. But it's clear that if the company becomes 100% subsidiary of EIH, then all assets and liabilities, including all the cash and bank balances, will then belong to EIH.
Just one last question regarding the same dispute. So when is the lease? What is the starting period of year of the lease period?
That's still under discussion with the government.
Okay. And my second question is regarding Cuckoo. Is the Cuckoo place being converted into the restaurant you're talking about, Mr. Oberoi?
Actually, nothing is being done, Amit, in terms of the decor. What we will be doing is making changes in the menu. And for that, there's minor changes in kitchen equipment, which is already underway, after which we'll be introducing an additional menu or a new menu. It won't be entirely different, but it'll have many new items. And the endeavor is that it becomes more of a dining experience.
So this is the same place. Sorry.
Yeah, sorry. I just in case I've understood you correctly, are you asking about the restaurant that we have listed out, because that is different?
Yeah. Okay, that's a different place altogether.
And this is a restaurant.
Okay. Any idea that you'll be taking this club and the restaurant to cities like Delhi?
Amit, I've already answered that question. So beyond that, I don't want to say anything.
And my last question is regarding Oberoi Dubai, which we left 6 months back. How much revenue that hotel was adding to our annual turnover?
I don't have that figure with me. So this was a management contract. So Amit, I don't have that figure with me.
Well, it was a management contract and it was under EIH International. So therefore, not in terms of revenue, that's not such a significant figure to really talk of.
So that means all managed properties hardly give any revenue to the company, right?
No, it's about 10%. On an average, it's about 10%. It varies. In many cases, it has a base management fee of one or a couple of percentage points on revenue, in addition to a percentage of the profit. But yes, of course, I mean, the flow through to profits, whatever is received as management fees flows through to income. Whereas in case of hotels, it's the larger chunk of revenue minus expense. So obviously the quantum of flow through is always lesser. I mean, the quantum receipt of the revenue is much lesser.
And my last question is
Amit, I'll have to interrupt you. If you can request you to join the queue, there are others waiting to ask their question.
Thank you.
Thank you, Amit.
Thanks, Amit.
Thank you.
The next question is from Prateek Kumar. Prateek, please go ahead.
Good evening, sir. Can you hear me?
We can hear you, but there's a lot of disturbance in the background.
Okay. So I'll start my question. So firstly,
Prateek, it's difficult to understand what you're saying.
Okay, maybe I'll get back to the queue. I'll dial in again.
Thank you. The next question is from Sumant Kumar. Sumant, please go ahead.
Yeah, hi, Kalol. Hi.
Hi, Sumant. How are you?
I'm good. How are you, sir?
I'm well, sir.
So my question is regarding seen in the PPT, the Trident and Oberoi leisure destination OR has declined versus pre-pandemic. So can you talk about the reason for that?
What's OR?
Sorry, someone didn't understand your question.
This is regarding Trident and Oberoi leisure occupancy rate versus pre-pandemic has declined. Okay, so
in Q2, Claude, do you have it for half year? Because half year is still. If you have it for half
Q2,
year,
I'm talking about Q2.
Yeah.
So you can refer page number 15.
It's from, I think, 40. Was it 42 to 38 or something?
Yeah, 14, page number inside 14.
So Oberoi, you're talking of Trident
leisure and Trident leisure
and
Oberoi leisure.
So Oberoi leisure, and you're talking of what? Occupancy
decline versus pre-pandemic. Q2 23 versus
40%. Yeah, that's true. 40% to 38%.
And then Trident leisure is 69 to 66.
66%.
Yes.
Though there is a growth in RevPAR, if you so the same period, if you look at Oberoi leisure, it's 7,800 to 10,444.
Yeah.
So effective revenue has gone up.
So our strategy to hold the price, not focusing on occupancy. So industry is moving towards that, right?
Sumant, I don't know what the industry is doing, but the objective is obviously certainly for us, and I would imagine for others as well, to drive RevPAR, which is a function of rate and occupancy. And I think for us, certainly lowering our rates is something we don't think in the long run is a good idea. We're not a commodity, and commoditization, which is price driven, is the worst thing we should do, because a commodity can't demand a premium pricing. So certainly we do not want to go the price route. We would like to keep our rates, I wouldn't say high, but in keeping in mind our guests, what are reasonable and fair rates for the quality of hotels we operate, and for our guests to see value in that and choose our hotels rather than looking at reducing prices.
So at this price, can we expect the kind of occupancy we have in, say, villas 38%, we can improve this occupancy to optimum level, and the price might increase from here also. So
I'm just going to cover, maybe it's a bit too much detail, but the occupancies in Trident have fallen because of Trident Agra. Should I get into that or so there was at Trident Agra, there was a piece of business which was Trident Agra is just under 140 keys, and we had 20 room nights, which was a long stay business that we had pre-pandemic. That business didn't actually come back. So if you look at that impacted occupancies at Trident. So that's the first point I wanted to highlight. I think in all fairness, we shouldn't just look at a quarter, because if we look at a quarter, we may arrive at the wrong conclusion. And therefore, Sumant, my recommendation is please also look at the half year. I don't know if Kalol has the figure ready, but I think we'd be coming to the wrong conclusion if we just looked at a quarter. In terms of rate, occupancy, etc. So that's the other point I want to make. Kalol, do you have the half-year figures broken up? If we do, otherwise, someone will be happy to take that offline. So I think, and the idea is to give you a true and a fair picture of business. You may not get a true and fair picture if you just focus on one quarter.
Okay. And in the slide number 16, we were talking about increasing room night from foreign tourists. So it is showing a 40% from Oberoi. So this is a 40% of pre-pandemic level?
No. This is a 40% is the composition of the foreign room nights as total room nights.
So currently, of the total rooms, Oberoi has a 40% is from foreign tourists and 60% domestic.
Yes,
is it correct?
That's correct.
Okay. So can you talk about versus pre-pandemic? What was this number? The 31, 35, and 40% versus Q2 or overall annual basis? What percentage of the business we got from the foreign tourist? 80%, 70%?
We don't have that number ready, but we'll be happy to share that number with you.
Just can you talk about the trend? It is a below 90, 80 or some 20, 30% business is still has not come to India for EIH?
We'll be happy to share that with you. Kalol, do you have that with you?
Well, it will be in our previous presentations, but I can try and locate it while the call is still on.
Okay, but just give a color how things are happening.
So basically, he wants to know how.
Yeah. So I don't want to. It's best we give the actual numbers. I can tell you that it hasn't recovered fully. That I can tell you. But if you ask me to what percentage, and I don't want to give you a figure which is incorrect. So let's refer to the data and give you the correct figure, rather than either one of us taking an educated guess, because we may be off by 5 percentage points. We don't want to make that error.
Okay. And the last question, can you talk on the corporate rate hikes negotiation happening for EIH?
Yeah. Again, our objective is to get the maximum rates possible. We have to consider supply and demand, and we also need to keep in mind the long-term relationship we have with our corporate clients. And keeping all that in mind, our endeavor is to increase rates to levels that are acceptable to our corporate clients and that don't jeopardize business, but ensure we drive RevPAR.
The overall sentiment is positive, and we can get a higher price increase from the corporate side. And can you talk about what is the mix of corporate in our total room night?
Again, I think you need to, Sumant, please just don't look at, for our city hotels, just corporate. Direct business is also, or transient business through direct channels is also a large part of that is corporate business, whether that's in Bombay or in Bandra Kurla, whether that's in any city location. So you need to consider both. But we are positive that corporate travel will continue to increase. The hotels would not be doing the occupancies they're doing in our city locations if it wasn't for corporate demand. And I'll give you a reason why this is so much. If you look at when business came to a standstill in COVID, the only drivers of business was leisure, and this is when travel had started again. And city hotels, whether they were ours or others, did very low occupancy. So the change you're seeing is being driven by corporate travel, whether they are companies with rates with us and on our corporate client list, or other people who may not have a rate contract with us, but who are traveling on business. That demand is strong. And if you go into our hotels, you can see that it is corporate travel. The way people dress, you can tell they're there for work. Also, single occupancy as opposed to double occupancy. So we have good reason to believe that corporate travel is returning. It's still not at pre-pandemic levels if you look at just corporate, but if you look at corporate and direct, it's ahead, and we feel that trend will continue.
Thank you so much.
Thank you so much.
Thanks so much.
We just have time for a couple of more questions. We'll take a couple of them offline. Poonam Joshi asks, if foreign travel recovers, say 80 to 90% in the second half of 23, how do you see ARR and the revenue from current level?
Again, Naveen, I'm a bit reluctant to answer that question. First of all, I can't predict what foreign demand is going to return to. I think the trends are certainly positive. And I know the rates that we have, at least our leisure hotels, we'll be able to achieve those rates even with our domestic segment. And that's certainly reflected in the ARRs that you see at our leisure hotels, particularly Oberoi, which Kallol has shared. So I think our winter rates will be maybe a little bit higher than they were at pre-pandemic levels. And if demand is strong, we'll see an increase in occupancy. I also wanted to highlight how travel happens for leisure. So when people come to, and sorry, I'm stating the obvious, many people may know this, so please forgive me if I'm saying something which is you already know, but people come to India and go to multiple destinations. They don't just go to one destination, whether that's Jaipur, Udaipur, obviously coming through Delhi or Bombay, etc. The average is about a 10-day stay, and they're going to, at least 3 destinations, if not 4 in that time. And although people book these itineraries directly with us, the vast majority, or maybe wouldn't say vast majority, but about 50% of that is booked through destination management companies in India or tour operators and travel agents abroad. And for those segments, we have rates which are negotiated rates, just like we have with our corporate, so it's net non-commissionable rates. So therefore, we can't just change those rates. We've made commitments to our partners. We have to respect those commitments. And therefore, what you'll see is a surge in demand. Of course, there are blackout dates, etc., Christmas, New Year, and other high peak periods. But what we'll see is rates for both Indian and foreign guests are strong, and any additional demand will help drive up occupancy further.
Thank you, Vikram. Okay, we're just running out of time, friends. So before we wind up, I'll take a last question from Rajiv. Rajiv, if you can please make it short. Thanks.
Yeah.
Rajiv? Yeah.
Hi, thanks for the opportunity. Sir, I have a couple of questions. One is in the notes to accounts, you have stated that the stipulated consideration for the in the Mashobra agreement. What is that towards, in the sense, apart from the lease? Is there anything else?
So there was a lease. This is actually in the Mashobra accounts, not in the. Although we provided it under an exceptional item in EIH. So there were lease payments from 2005 from the arbitration award up till now. And that, if I remember correctly, is 27.9 crore. There was also 3.5 crore, which is for the delay in the hotel being completed. That's 3.5. And then there's a 7 crore, if I'm not mistaken, for the government share in the equity holding of Mashobra. Kalol, have I got it? Yeah.
Yeah, it's right. And Rajiv, I think this 27.9 crores of rental arrears of rent is already in the accounts, as you can see, which is there as an exceptional item. So you can do your calculation, 27.9 in 17 years. So I hope that gives you some clue as to what the rental per year could be.
Right. And sir, if you can give an update on the flight catering business, have you got any improvement there? And if you can highlight, let's say, what are the H1 numbers in terms of revenue and EBITDA?
We don't, Rajiv, it's not a separate segment of business for us for reporting purposes. But yeah, we are certainly better off than last year. And by the end of the year, definitely we'll not have a loss there.
Sure. And my last question is on the OTA dependence. Have we seen increase in OTA dependence? Because when we see, let's say, Make My Trip data, their take rate is going down, kind of indicates that they are basically skew is towards 5-star hotels now. Is it a trend?
Again, I'm reluctant to. I can hazard a guess, but I don't want to give any information.
Maybe a trend is what at best, Rajiv, from begins.
Yeah. So Rajiv, I don't believe the proportion of OTA business as a percentage of our overall business has changed in any significant way. I think OTA business has increased in line with other business. So that would be my response to that question.
Perfect. Thanks a lot. Thanks a lot.
Thanks, Rajiv. Friends, we need to wind up because Mr. Oberoi and Mr. Kundu have a prior commitment. That was the last question. And before I invite Mr. Oberoi and Mr. Kundu for the closing remarks, congratulations once again on being voted the best hotel brand in the world.
Yeah.
Your closing remarks.
Thanks, Naveen. I think I'll pick up on what you just said. On being recognized as the best hotel brand. We're really proud of our Indian heritage. We're an Indian company. Our roots, our very strong roots, starting with our founder chairman, were in Simla, and then at the Grand. And to take and fly the Indian flag around the world and to be recognized as the best is something that we're very proud of. Not only for the country first and then for ourselves. And really the true champions of this are everybody who work in the hotel, who uphold our dharma, our values, the principles on which we run our business, the care we show to our guests, the care we show to each other. I think this is what really drives the Oberoi Group culture. And we try never to compromise on that culture. And the true heroes, like I said, are our general managers, our executives at the hotels, and all our colleagues there. They deserve the credit. We're there to support them, but they deserve the credit. So I'm deeply grateful and express my gratitude to all of our colleagues above all else.
Thank you very much.
Thank you so much.
On behalf of all of us at SKP Securities, I'd like to thank Vikram and Kunal for the time, and we look forward to hosting you again. Thank you, ladies and gentlemen, and have a wonderful day.
Thank you, Naveen. Thank you so much.
Pleasure.
It was a pleasure to host you.
Thank you so much. Thank you.
Bye-bye.
Recording.